Hi, this is Jack from Alpha Charts with a state of the market video. Today is January 16th, 2022. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. Now, I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please subscribe to my YouTube channel. Really does help me out. I appreciate it. Just click the subscribe button real quick right now. Thank you. This is actually take two. First time I had myself muted the entire way. It was a beautiful silent movie, but that doesn't work out so good. So let's get going. SPX, holding up pretty good. Let me throw some more moving averages. Let's throw 200 in there and the 23-day. Not to muddle this up too much. Prices under the 50-day, but you have a rising 200-day, and it's really, we'll call it in a range. Again, something just to be aware of. You have a kind of a broadening, it's not really broadening formation, but you have kind of this thing happening. You have a longer trend line happening too. So it's getting a little bit loose in here. I guess that's my point. But it's not doing anything terrible. You can see the RSP holding up even better. Obviously we're seeing the rotation into financials, energy, and things of that nature. And it's really showing up here, right? I mean, it's above all of its moving averages, right? And they're all rising still. So just be aware that, the market, some stocks are going down pretty rough, but not all stocks. Looking at the Qs, I mean, and this shows it right here, right? There's your 50-day up here. Price is well below the 50-day. You're getting, this turn right here is looking pretty rough. And then here's your trend line break. And again, it's nasty. Looking at the equal weights, and that's even nastier. You have now the 23-day crossing over the 200-day. You have a very hard downward motion to the 50-day. And you have the potential head and shoulders topping pattern here. Has not confirmed in my opinion yet, but it's looking pretty rough, right? And again, you may get one more spike up. And again, it's lower high, lower high, lower high, lower high. So we haven't made a higher high in a long time, right? Since November. So again, it's a downtrend, period. Underneath the 200-day, looking nasty. IWM, you're about to get this, whatever they want to call this cross. I think it's something like a death cross or whatever they want to call it. But this is a year-long consolidation that looks like it may try to go to the downside. Hasn't done it yet, so we don't know that. But that's a pretty nasty look to it. And I don't think there's all that much support between this break and this, which would be a major area of support. So just IWM, if it breaks, let's just say from here, you're looking at 18%, from its current price, probably closer to 20, right at 20%. So a 20% decline in the small caps, that's going to feel like the market's going to zero. It's obviously not, but that's what it's going to feel like. And look at IWO. So this is small cap growth. Now, small cap growth has already broken down, right? Already has the death cross. So it's leading the market to the downside. And I think it's going to cause more pressure on especially technology and the growth sector. I threw some fibs in here, and the fibs are from closing prices. So I'll just put on the line chart, show you that. And these are areas of potential support, right? So, this 277-ish area, that was an area that could have been support. I think, 238-ish is an area that potentially we could find support. And again, just looking at from here, it's another 11, 12% down. This is obviously a major area of support. Again, from here, you're looking at 17, 18%, right? And then potentially this area. So there could be a lot more downside movement coming. I don't know that they're guaranteed that there is, but again, all we know is the price action, right? nasty look, bad breakdown. This should have, after a big run like this, consolidate. You're supposed to break out, not break down. Again, not a good look. So let's look at financials. So looking at the financials, much better look, right? I mean, financials have been in an uptrend, since March 2020, and they are near all-time highs. Now, I don't like that JP Morgan had earnings and it was a big gap down, and there wasn't a ton of buying pressure, and it's below the 200-day and all that kind of stuff. But overall, XLF looks pretty good. And I think that's a positive for the market. SMH. So SMH is starting to get this broadening, really choppy, nasty. To me, I don't like this look. I like tight price action. This is the definition of loose price action. That tells me that maybe there's let me throw some volume on there. Maybe there's a distribution happening in this. Again, I'd be careful if I was owning SMH right now or any of its components. I don't like this type of look. Again, hasn't done anything wrong, but if it breaks down, it may break down pretty hard. We'll see. Let's see where it's at to the 200-day. It's right at the 50-day right now. 12% to the 200-day. Even if it just retests this particular breakout right there, that's 10%, 17%. So you see the extensions from potential areas of support are roughly the same, that we're seeing. But SMH, again, not doing anything wrong, but has that look where it may. Lumber, wood ETF started to make the right side of this base and could not make a higher high relative to this high. Has that look to it, right? We'll throw a VWAP from there. Has that look just like this, which looks like that. So we'll see where this goes to. It was looking really, really good for a while. Rolled over, on the weekly. That's what the weekly looks like. So again, I'll still say it's a positive look to it because it is above all its moving averages and did make a higher high relative to this right here. So maybe the right side of a base. So maybe it just needs to kind of make some sort of a handle and then break out. We'll see. So inconclusive, we'll put that. Bond ratios. Get rid of these moving averages, and we don't care about volume with this. All right, where's that 200? There it is. All right, bond ratio. So if the market was going to fall apart, I would. There we go. If the market was going to fall apart, I think we would be seeing a situation looking like this, or even like this, right? But we're not. Bond market is calm right now, and a calm bond market says no, it's not falling apart. So this is telling me that we're in a place where it's a stock pickers market, and there's rotation within the market into some sectors that are maybe not the sexiest names, right? Growth name, non-growth names like banks and energy stocks and grocery stores and farming stuff. But the bond market right now is saying nothing to worry about. Again, looking at the 10-year yield, here's a 10-year, and we had this big thrust up, kind of came back, quick recheck, and now it may start trying to move higher again. If we do get another big move like this, that would be the start of probably the next leg down for the growth sector. I think 2%, and I've talked about 2% in the past, is a likely place for the bond yields to go. And then we'll see. And of course, 3% if it breaks out from there, I think go to weekly so we can see it better. By the way, this is the downtrend line from 1981. Again, if we break the downtrend line, oh boy, that would be bad. Yeah, so I think this 2% area right here, I think that would be an area of potential place where maybe the market could just relax a little bit. If not, I think, this 3% area, somewhere in there. I think that would be an area where the market may find some. But again, if it breaks this downtrend line, that changes everything. I mean, this is a 30-year, 40-year downtrend. That'd be a problem. That'd be a big problem. So we'll see. That's TNX. VIX. We're still on the weekly, so let's go to daily. People aren't freaking out yet. That's a good thing, right? Again, it's a rotation market. It's not a death market. It's just rotation. Even the VIXN, you're not seeing gigantic spikes even in the Q's volatility index. Again, if that's staying calm with what's going on out there, that's kind of interesting, right? Put call ratio. So in the put call ratio, people are a little bit bearish, but not overly bearish. So no real signal in here. Equity only put call ratio. I like extremes. It should be, maybe in this range or in this range, really, and historically above 1.4 is the range for a call, for a directional movement, contrarian type movement. Value line geometric index, again, range bound, not really giving much of a signal here. Breadth is choppy, but in the same range. And about 5% stocks above the 50-day moving average. And you're seeing that in here too. You see that it's been within this kind of choppy range for a while. Only 42% are above the 50-day. So breadth is not spectacular, right? But it hasn't been for a very long time. We're looking for extreme moves, right? In order to get, again, a signal. And we don't see that quite yet. Gold, on the weekly chart, again, just trying to build out this pattern. Maybe somewhere, it'll rely on interest rates, probably will, in order to finish up the pattern. So if TNX breaks out, and you see gold breaking out, that's an issue. And Bitcoin, let's just get back on. Here we go. That's the chart I like. And here's a downtrend line, right? So we learned that crypto is basically the riskiest of the risk assets. So if it's going up, chances are stocks are going up and risky stocks are going up. And if it's going down, chances are stocks are going down and riskiest stocks are going down. And so we'll see if this holds, right? This 40, what was this? Low 39,650, right? If this holds, that's a good thing. This trend line will then be, take out the trend line and maybe make the right side of a new, basey type thing. We don't quite see that yet, but we're not seeing this breakdown either. So that's a good news right there. So if we break this downtrend line, I think that'd be definitely a bullish scenario. A breakdown here would be a bearish scenario. All right. So where am I at with all this? I think that I think IWO shows the best. IWO is the scary chart of the week. Again, it already broke down. You already have crossing of longer term moving averages, like that, QQQ. You're seeing that is not quite there yet. Equal weight Qs though is, again, it's starting to get there, so IWM, it's much closer to getting there, obviously. So I think that the market right now is a stock picker's market. Know what you own. You may want to go smaller. Cash is a position in this. It's just not a healthy market. Now, there are things going up, things like energy, things like financials, things like grocery stores and farming stuff, among others. And but know what you own also. If fear truly does come into the market, even those probably won't be safe. So just be aware of that. Yeah, and tomorrow or tonight, I'll be doing a stocks to watch video, which will go over, what is going up and where there is opportunity to make money on the long side. So check that out. Again, if you haven't subscribed yet, do it right now. I thank you very much. Hope you all have a great week. Bye.